Everybody see that okay?
Mm-hmm.
Yes.
Excellent. Well, it's good to have all you on tonight. It's been a while since I've seen most of you in person. Crazy what this coronavirus disaster has done to life, to business, to everybody's nerves, family life. It's been an interesting journey, to say the least. What I want to cover tonight is basically the SBA loan programs that are available and which were signed into legislation last Friday, March 27th. We are not going to talk about the stimulus plan, stimulus payments. We don't really have enough time to cover that. We don't have time tonight to cover, because we have about 30 minutes max on, I think, this meeting. We're not going to cover another act which you're familiar with, which is the Families First Act. That was signed into law March 18th. And that's the one whereby there is now a mandate on employers, including all of you, if you have one employee or more, to pay people who must take leave for family or medical leave, sick leave, what have you. Fortunately, the government is going to reimburse you through what will become an interesting period here over the next couple of weeks as my staff tries to navigate through the new payroll tax forms and credits that might apply to you. But anyway, we're not going to talk about that. We're going to talk about the legislation that came out just this last Friday, and that's called the CARES Act. And the CARES Act basically has two loans that are available, and we'll discuss both of them, but we'll really focus on the payroll protection plan. So here's what we're going to talk about. We're going to talk about the two types of SBA loans. We're going to talk about the PPP loan, which I think is really the big one. Get a little feedback. We're going to talk about how the loan amount is determined. We're going to talk about how the loan forgiveness amount is determined. We're going to talk about what we're doing as a firm with regard to this loan opportunity, and also how we can help you. And then we're going to talk about the process we go through to get this loan. So that said, let's see if we can get this PowerPoint out there. Good. Okay. So basically, there's two types of loans. One is called an economic injury disaster loan, or an EIDL. And there's another one called the Paycheck Protection Program. And some of you may want to mute you can mute your audio because we hear a lot of background noise of banging and other people talking, whatever. So you may want to mute your audio so that we don't hear all that ambient noise. Okay, so let me tell you just first quickly about the EIDL loan, just so that you're aware of it. It's called the Economic Injury Disaster Loan. It's also called the Fast Track Loan. This is something where people have already been applying online. Started applying last Saturday. You can get up to a $2 million loan. You can use that money for payroll or debts or accounts payable or other expenses that have arisen because of the disaster. It's got a 3.7% interest rate and a 30-year term. It does not have any eligibility for forgiveness, however. It's a straight loan. Think of it as a fast track loan where you can get money quick. That's basically the main attraction of this particular program. Then there's another one, and one I want to focus on tonight. It's called the Paycheck Protection Program, or a PPP loan. This loan is one where you will apply for it at a bank, not online. The loan amount is determined as 2.5 times your average monthly payroll. We'll talk more about that in a minute. That's what you can apply for a loan as a maximum amount. You can then use that money for payroll, for utilities, for rent, and if your business owns a building, the mortgage interest on your business building. There is a 4% rate of interest on the loan. There's no payments for the first 6 months. Then it's a 10-year term. And it's eligible up to 100% eligible for forgiveness. which in a lot of cases makes this really a grant and not a loan. A few more details. No bank fees, no government fees for this loan. There's no collateral. There's no personal guarantees. It's a non-recourse loan. You're not on the hook for it. There's no prepayment penalty if you pay it off early. And any small business, which I love the way the government or Congress thinks of businesses as small. They think small businesses are ones with 500 or fewer employees. You know, I generally think of a small business as one that has, 5 employees, 10, 15, 20. Anyway, that's basically the nuts and bolts of this particular loan. So let's talk about how is the loan amount determined. And if you haven't caught on yet, all of you are essentially clients on this call who we invited on because you all are either payroll clients or your bookkeeping clients that we know have payroll outsourced maybe to Paychecks or someone else, but you all have employees. If you don't have employees, you can't really take this loan out. You can't get any forgiveness for it. The loan is based on a year's worth of payroll divided by 12. In other words, your monthly payroll. Now, I've seen this number communicated a couple of ways. The guidance is still not out. I talked to 2 banks today. Neither of them yet have the forms available. And one of them said, we're just taking names and numbers and we're going to start, processing this on Friday. Well, I since found out that's the first day that you can actually apply for the loan is this coming Friday. But there's 2 ways this payroll number has been calculated that I've seen, 2 different ways. One is you take your Form W-3, which is kind of the cover sheet for all your W-2s last year, and whatever's in box 5, that's your last year's payroll number. I've seen another bank state it won't be that way. PNC is actually going to be asking for 941s and 940s. And I'm thinking what they may end up requesting is the last 3 quarters of last year and the first quarter of this year. So what makes up a year's payroll could either be a calendar year of last year, or it could be the last 3 quarters of last year and the first of this year. And it could be determined either by the W-3 or by 941s. We'll see. But basically, for your purposes, just take last year's payroll, divide it by 12, multiply it by 2.5. Now, this number can only include up to $100,000 for any one employee. So if any of you, and I can only think of 1 or 2 potentially, if any of you are owners of an S-Corp and paid yourself $120,000 via salary last year, you can only include $100,000 of it. So you can include $100,000 for any one employee. Anyway, in my example, if you had $240,000 in total wages, which is, the small range most of us live in as small business owners, you divide that by 12, that would be a $20,000 monthly payroll. If that's your monthly payroll, you'd multiply that by 2.5, and that would be the amount of the loan you could apply for. By the way, payroll could also include, in addition to wages or salary, tips that you paid out if you own a restaurant, vacation pay that you paid employees, sick leave, allowance for dismissal. So if you, had an employee last year or in the first quarter of this year who you dismissed, and you paid them that allowance before now, that would be included. Any group healthcare benefits that the company paid in, that you as the business owner paid in, any retirement benefits that you as the company paid in for your employees, and state unemployment tax could all be included. So let's talk about forgiveness. Basically, what you're stating is you're going to maintain or quickly rehire employees, and you're going to maintain salary levels. That's basically, look at the name of the program. It's the Paycheck Protection Program. The government is trying to protect paychecks, and they're doing it. Notice it's not called a loan. It's not called a Paycheck Protection Loan. It's called the Paycheck Protection Program. So in other words, you've got a program that if you take this money and you use it for the 8 weeks after the loan is originated, so let's say you apply Friday or next week, and let's say you find out you got the loan within the next couple of weeks, whatever the origination date is, their forward 8 weeks is how the loan forgiveness, the period that the loan forgiveness is calculated. So whatever you pay for payroll, mortgage, interest, rent, utilities, you can get paid back for. And it's really a two-step process. On the front end, you apply for the loan. I'll show you a copy of the application here in a moment. TV on or something in the background. If you could mute your audio, that'd be very helpful. Whoever's got TV or radio on in the background, could you mute your audio? Thank you very much. So it's a two-step process. On the front end, you make an application. I'll show you that in a minute. Then there's on the back end there's a second application where you apply for the forgiveness.
Hey, Jim, I think you can mute people.
Well, let me try and see what I can do here. Stop video, pause, share, annotate, remote control, more. Yeah, I don't see an option where I can do that. But whoever has that background noise, could you just please mute? Okay. All right. So there's two applications, and I'll talk more about that in a minute. Let's move on. You're basically saying you will not cut wages or slash employees. Now,
Jim, you can't hear a thing.
Hey guys, go to your screen, go to your picture or your screen, and just highlight with your cursor and click mute.
Yeah, Jim, if you go to the participant icon, you can manually click on their microphone to mute them.
I cannot. Manage participants. Maybe that will help. Mute. There we go. Thank you. All right. Now let me get rid of that. On with the show. Thank you for your patience. Here's an interesting kind of dynamic on the way the math works, okay? If you look at the way the loan amount is based, right? It's based on monthly payroll, and it's 2.5 times your monthly payroll. Well, how many weeks are there in a month? It's 4.3. So the loan amount basically is based on 10.75 weeks of wages, but the forgiveness amount, you're gonna basically calculate over 8 weeks, plus your rent and utilities. But so you're getting a loan based on 10.75 weeks, but you're gonna get a forgiveness based on what you do that 8 weeks after you get the money. So you may wanna think in terms of maybe, 80% of what you borrow actually will be forgiven. That's kind of the rule that I've used in my own mind. If you get a $50,000 loan and $35,000 is forgiven, then that does leave you $15,000 left over the next 10 years to pay off. But it's not so bad. It's 4%, and the first 6 months are deferred. So it's actually very attractive, even if all of it is not forgiven. What are we doing as a company? I don't think any of us here can predict with any confidence, the near future for the economy, or what, our own business cash flow is going to be. I have 0% confidence in our ability to predict that. So the economic reality is, I think it makes sense to, if you're running a company, and I think we're a fairly healthy company at Anchor Accounting and Tax. But at the same time, we want to manage our business with caution, conservatism. We do want to have money for what we need. We want to have money to pay our employees and go forward. So we do anticipate obtaining the loan. I anticipate, as I said, 70, 80% of the proceeds will be forgiven, hopefully more. But what is left will be repaid at 4% interest over 10 years. So, I think if it, for us, it makes sense. You have to judge in your own, situation. Does it make sense for you based on how many employees you have? Are you the only employee? How much do you anticipate paying yourself over the next 8 weeks, right? Because that's really what it's going to come down to in a lot of cases. That said, what's the process look like? Again, there's two parts. On the front end, there's the initial application. In reality, I think you can prepare this. I'm going to show you the application in a minute. It's relatively easy. It's basically a matter of putting in your contact information, answering a bunch of yes or no questions, yes, and then filling in the amount for the loan, which frankly the bank will help you put that in based on the documentation that you might have to give them. If you have lost copies, we always send you copies of your quarterly payroll tax forms. We send you copies of W-2s or make them available. If you've lost those, there's always been a sign in our office about the last 6-7 years. If you need another copy of a tax return, there's a $30 fee. Well, we may just charge you a $30 fee for getting you all the forms but that being said, you should have the forms. If you need them, we'll be glad to provide them. I kind of expect our staff will be spending most of the next 2 days uploading payroll tax forms to people who've lost or misplaced them, but that's fine. That's what we'll do to help you. The second part on the back end is the forgiveness application. And I think this is really where the rubber meets the road, because it's going to be relatively complex. In fact, no one has seen all of the details, but I imagine the worst. I think it's going to be complex. I think it's going to be kind of the math that hurt your head in high school during calculus class, applying all the formulas. And you really don't want to, have any mistakes on this. You really want to be accurate because, let's face it, that's what your forgiveness is based on. So we will help you with that. I figure that'll probably kick in somewhere in the June, July, really July, August timeframe. And frankly, most of our rush in our office will be, not most of it, but a lot of it will have passed due to the extension of the income tax deadline. And by the way, the IRS did extend the tax deadline to July 15th, but the state did not. The state, which you still have to put the federal tax form on top of the state form when you file the state form, is due May 1st. So, I think most of the rush we'll have done either with filings or extensions. We'll have time then to really help you prepare some of these forgiveness applications. I don't know what the fee will be. I haven't seen the form yet. I anticipate it'll be somewhere in the range of a basic 1040 type return fee, but we'll see. We'll figure that out. It'll be reasonable. Here's what the application looks like, just so that you know. And you can see it's pretty basic up at the top. Business name, primary address, what's your average monthly payroll. I think the bank will help you figure that one out. And then you're listing who the owners are. You're answering yes or no to some questions. There is a page 2, there we go, which basically you're just certifying that the current economic activity makes the loan necessary. The funds will be used to retain workers and maintain payroll. If you're going to provide documentation, it's, that you agree that the loan forgiveness will be provided, with a certain formula and so on, and then you sign it. So it's relatively easy. That said, I talked with one bank today. I talked to 2 banks, and this is kind of PNC's checklist. Find your bank or credit union. Many banks or credit unions will be good at this. Some banks and credit unions are not business centric, so they won't be good at this whole application process. What PNC will be looking for is the quarterly payroll reports. Even 1099s for independent contractors might be included in this. I don't think it will, based on the guidance I've seen, but I think PNC is covering themselves just so that they've got everything. documentation of your health insurance premiums, and retirement plan funding that you did. And so finally, if you're looking for a form, it is available. We have put it on our website. If you go to anchoraccountingandtax.com/forms, you will find the PPP application. You'll also find an application for the other loan in case you're interested. But that's basically the long and the short of it. I'm going to try to pull this back up and see what questions you might have. That could be a benefit for everybody. Unmute all. All right. So let me get me back on the screen, maybe. Anyway, what questions do y'all have?
Hey Jim, on the SBA's website, it says that the payroll protection loan is a 0.5% interest rate. How is that different from what the banks are offering, or why is it different?
I don't know. Everything I've seen says it's 4%. So I've spent hours watching webinars, like this, but just a bunch of accountants. What an exciting time that is.
Yeah, it says it's right on the SBA's website under the Paycheck Protection Program. It says lenders begin processing loans as soon as April 3rd. The loan has a maturity of 2 years and an interest rate of 0.5%.
Well, that's completely opposite what the law says, which is 10 years and 4%. So that's like so many things in this, that's going to be a question for your bank. The guidance, honestly, I've waited this long to even address all this new legislation because so many of the details there's no official guidance. The SBA site may say one thing. I've seen other sites say another. I've seen 2 or 3 key accounting sources not agree on certain details of this plan. So stay tuned. I like a 0.5% better than I like 4.
Hey, Jim, this is Chuck Smith. We have a lot of 1099 employees that, as coaches who coach classes,
Yeah, Chuck.
obviously we're not coaching classes right now. How do I continue to pay them if I have them like clean the gym or do different things that keep them occupied and give them a paycheck for that? Would that be considered maintaining a paycheck?
Yeah, I mean, that's really the goal, Chuck, is just to keep people getting paid, keep the economy from completely grinding to a halt and families completely being at no income. So I think Chuck, you're in a tough spot. Chuck, if you don't know, folks, runs a gym, CrossFit gym. And I think you're in a tough spot because, you're kind of at that point where it's really difficult to know with certainty that you'll, have work for these people.
Yeah.
Jim, it's Danielle. I'm in the same place with my stylist.
Yeah.
I don't know how to even give them any income with no income coming in. There's nothing they can do.
Yeah. I think that's really the crux of the issue here. So you don't have work for them to do. Theoretically, you could pay them with money that the government will forgive if, but here's kind of the key for Danielle and for Chuck. You really have to be confident that you can maintain the same number of people being paid and the same wage level as what you did over the past 12 months. That might be I think you're in a different situation, for instance, than my business, which, certainly we've had tax season, which normally would be coming to an end here in 2 weeks. Well, now we've got an extension on that. We frankly have a lot of, bookkeeping clients who've closed shop. We've got restaurants, hair salons who've been forced to close up, or at the very, least operate, minimally with delivery only type service or pickup only type service. There's really no way you can be confident that you're going to be able to maintain that level of pay. Of course, the government now is coming into the picture and saying, well, we'll reimburse you, we'll forgive you for taking a loan to pay those people. It really comes down to confidence of, what will be the percentage? Let me just give you a real life example. In my business, we have 5 employees, okay? Typically, we have an employee, a 5th employee, who typically leaves, at the end of April or early May. I may be in a position where instead of 5 employees, I have 4. I hope not. I hope I can convince that employee to stay on through the end of June. For 2 reasons. One, I think we're going to have the tax prep work to do. And second, it would help me with this, forgiveness provision. But if I go from 5 to 4, then I'm automatically at 80%, right? If you go from 10 stylists to 2 or
Yeah.
6 gym coaches to 3, your forgiveness amount is going to be, impacted by that. So you really have to just say, I'm going to pay people what I paid them last year. I'm going to pay all of them, and I'm just going to count that the government's going to pay me back.
Hey, Jim.
Yeah.
Hey, this is Steve Heisman. I was just wondering, like Danielle was just saying, or the fact that we have a real estate, because we got a small real estate team.
Right.
We have an agent that just came on that was in a different business altogether last year. So he's not making any income. Can he, or like say Danielle's clients or other workers, can they file for unemployment?
Well, they can. Here's an interesting side note to this, however, that really is relevant to your question and to Danielle, is that if you yourself are getting paid on a 1099, or you have other people that are getting paid on a 1099, they can apply as a self-employed individual for this Paycheck Protection Program themselves. Sounds counterintuitive because they're getting a 1099 and not a paycheck. But the government next week is going to come out with guidance on how self-employed people themselves can apply for this program.
What do they base their income on? What do they base their income on?
On their 1099. On their 1099 self-employment income. So in other words, if a self-employed contractor has been filing a Schedule C on a 1040 tax return last year, they basically take that net income from last year, divide it by 12, multiply it by 2.5, and that could be their loan amount.
Even if they weren't an agent or a hairstylist or something like that last year?
It could be any real estate agent getting paid on a 1099. They don't have to be an S Corp and don't have to have payroll. So they could actually come under this this program.
I want to say that we W-2'd mine, though, even though they were commission-based.
Right. Yeah, you do. But there's other hairstyling salons on a 1099.
Okay.
Throw that in there.
Now, if you had an employee, and I'm sorry to take up the time, but if you have an employee, I think we talked about on the phone yesterday, Jim, if you have an employee that we just let go because of performance, nothing to do with this COVID-19 thing.
Right.
We talked about, is it better just to keep them on under a severance, or if it is just, like you said, to count their income as last year? Is that what I heard you say when you first started with this?
If you let someone go last year, or you let someone go in the first quarter of this year, and you paid them severance in the first quarter of this year, the quarter that just ended, that will be used and included to figure your average monthly payroll.
Right. Okay.
As far as what's being used to calculate the forgiveness portion, if you pay this employee severance over the first 8 weeks of receiving a loan, should you apply for it, then the severance pay will be also included as something that is forgiveness.
Okay.
But then the catch is, hire someone as a replacement, because you won't get 100% forgiveness unless you're going to have 2 things. Your wage number is going to have to be relatively the same as it has been over the last 12 months. And I lost my train of thought.
That's all right. We were just
The
talking
number
about
of employees.
The number of them, thank you. The number of employees has to be the same. So your wages and your number of employees have to stay the same. So if you have someone let go and you pay them, that amount would be counted, but it would be divided by, like, in my case, 4/5, right?
Mm-hmm.
By 4/5, 80%. Because, I had one employee leave, and, whether I hire someone as a substitute tax preparer, I don't know.
But you apply for the loan. If you apply for too much and you put it in a separate account, you don't use it, then you got it there to pay back.
Yeah.
Right? Okay.
And that's kind of, in my world, that's my business outlook at this point is we've had we've had clients who have closed up shop or losing that bookkeeping revenue. We're going to keep, some tax revenue coming in for a while. So, my thought is take the money, just put it in an account, try to operate without using it. And then if we need it, it's there. If we're still
That's a good point.
and rent, utilities, we're going to get, a forgiveness amount. And that forgiveness amount will be tax-free, by the way.
I was going to ask you, is that going to be taxable?
Tax-free income.
Wow.
The government is really, we're all in this position, and the government is just trying to, hopefully the government stays solid because they're trying to keep everything afloat. That's why I think the initial application is so easy. It's like you've got, they're not going to come back at you for personal guarantees. Just fill out the form and get it in. I think they want to get the money into the economy, just like they want to get the stimulus checks into the economy. They want to get money out quick. I think the longer process will be, getting the loan forgiveness. That's going to be a little harder. The application for that will be a little more stringent. That's why I think, we'll step up to the plate and we'll help you with those harder applications.
Yeah, hi, Jim. This is Rick Muscovak. How you doing?
Hey, Rick.
Yeah. First of all, thank you for having this meeting tonight, webinar. Concerning Danielle and the gentleman with the gym, I actually went through a webinar earlier today, and would they want to apply for the economic injury disaster loan for their business? And you can get $10,000 that's forgivable.
Supposedly.
Because since they don't have the employees, as far as
right,
that might be an answer for them.
It might be, and that might be. It might be. Now that supposedly 10,000 is forgivable. I've seen it both ways. I've seen people in my industry say no, that's not true, and I've seen others say, oh yeah, they can apply for the EIDL loan. And even if they don't qualify, 10,000 of it they won't have to pay back.
Right.
So it's more of a typical qualifying for the loan process. But if they're going to get you the money, but then if they find out you didn't qualify, they're going to just forgive 10,000 of it. So that might be an option as opposed to this program for Danielle or for Chuck.
Right.
I'm not as I'm really not up to speed as much on that particular program, because when I saw this one come out, I thought, well, this is really going to apply to most folks that we're working with.
Right. Yep.
So thanks for bringing that up. That's a good point. There is an application for that loan on my website as well. That is submitted directly online to the SBA. So, maybe for some of you who are in that situation, we can talk more closely, offline tomorrow and nail down really what makes more sense for you guys.
Hey, Jim, this is Tanya Nolan.
Hey, Tanya.
Obviously I have no employees, so
Right.
The EIDL is probably my best option. Is that correct?
Could be. You're the only employee, and you know your numbers. So let's not go over them, in front of everybody else. You know your numbers on what you paid yourself last year out of your interior design business.
Correct.
And
my clients have basically shut down everything.
so really, in your world, it's really more a matter of, okay, your monthly average payroll last year was X dollars. Will you pay yourself that out of your S Corp over the next 8 weeks? It's really not even dependent on whether, in your case, whether you have money coming in, with this loan, can you pay yourself that amount over the next 8 weeks? And then, the forgiveness program, you work out of home, so there's no real rent. Your utilities really won't be an issue. So it's really just going to come down to what is your forecast on what you can pay yourself over the next 8 weeks? And does that match last year's monthly average?
All right. Thank you.
Jim, along those lines, if this is a second job for you, kind of a side gig, and it's tied to your SSN as an employee pay, but you're still getting compensation from another employer, how does any of that factor in?
I don't think it factors in at all, Sean. You're a business owner and you have an employee, and that employee gets paid, and they want to make sure that employee keeps getting paid. that's totally independent of the fact that you work, you know, full-time for another employer?
Yeah. Okay.
Good question. All right. Well, I
One last question.
sure.
What if you have a new employee that wouldn't be on last year or first quarter?
Doesn't matter.
That adds to your likelihood you're going to get 100% forgiveness, because if you've got more employees over the next 8 weeks than you had in
Hey, babe.
average over the last 12 months,
I'm almost done.
what they want.
So in terms of the calculations, that's okay. That I'm referring to, I guess, what's current versus what was passed.
Well, the loan amount is going to be based on what's passed. The forgiveness amount is going to be based on the next 8 weeks. And again, it's going to be not so much whether they were new employees or old employees, but is the number of employees the same or more? And is the payroll the same or more? If your number of employees and the payroll are the same or more, you're golden for as far as forgiveness goes. You'd have 100% forgiveness. Who is that asked that, by the way?
Megan.
Okay, Megan. Very good. All right. Well, guys, thank you so much. I guess we'll shut it down for tonight. I really hope this has been helpful. I apologize for the rookie handling of some of the sound issues and whatever, but hopefully the information was worth your time. You all have a good evening. We'll see you later.
It was. Thank you,
Thanks,
Jim.
Jim. Appreciate your time.
Bye-bye. Thank you.
Jim.